Hey, what's going on, everyone? We are back at it again. I'm so excited to have attorney Aaron with us today. And, today we're going to do a kind of a credit power hour. We're really just going to delve into some questions that some of you have submitted. And we just want to be here to answer your questions, to give you insight into all things credit repair. And so, we're just going to dive in. We're not going to waste a bunch of time because we want to give you the most value that we absolutely can. Okay. And so we're here. If you have questions, we will be taking them live. We do have some that was pre-submitted. And so we're going to go ahead and jump in right with those until your questions start coming in. So, Aaron, welcome, man. Appreciate you hopping back on with us yet again.
Yes, thank you. Thank you. Don, before we begin, let me give my standard quick disclaimer.
Yes.
I'm here tonight in an educational capacity. To the extent I answer any questions, it's not direct legal advice for anyone watching, whether watching live or rewatching. I'm happy to answer questions again in a generic sense. I'm licensed in Florida. I'm right now in Florida. But none of this is to be construed as legal advice, certainly not across state lines. But here to educate and answer as many questions as we can. Really looking forward to it. So, thanks.
Beautiful, beautiful. And as always, guys, like we tell you, and thanks, Aaron, for that reminder, this is educational. And that's what we want to do is be educational support for you guys, okay? Because there's a lot that we do not know when it comes to credit and just this whole thing. And so anytime we can bring someone on, that's what we're doing, is to educate us as consumers. So with that being said, one of the first question that we had was, what are the most common issues that you see arise in credit repair cases?
Whew, wow, what a great question to start with. You could ask me that question, and I could now spend the next hour just talking about all different types of cases that we see. But I won't bore everyone with that type of an answer. So, just broadly speaking, what we see runs the gamut from a small technical case, could be someone paid a bill on time, but they're being reported as 30 days late, something as simple as that, all the way up to identity theft, financial fraud victims who come to us with help because there are a bunch of accounts and information on their credit reports that they don't recognize that was never theirs.
Mhm.
So the types of cases vary, of course, small cases, medium cases, big cases. What I'll say, even more broadly speaking, is almost every case of a consumer who's in credit repair probably has a case in a weird sense. So it might even be, look at it from that angle, is not the types of cases I see, but the prevalence of cases is there are just so few credit reports that are truly accurate and complete and consistent. And in this business, that gives us a lot of leverage.
Mm. Oh, that's good. I kind of want to back up a little bit. When you first started, you said even one's technical where they made a payment, but it was marked as 30 days late. Like, why would you take on a case like that? Like something as simple as you would think that they could just get that squared away, but why would it end up to you?
That's such a great question. I'm going to answer it in two ways. One, we take these cases on a contingency fee basis, and that is so incredibly important for consumers to understand because people may be thinking, I have this small little issue, my credit card bill, I paid it on the 28th day. They're saying I was on day 32. What lawyer is ever going to want to take this tiny little case? And it's even more evident when we're talking about small amounts. Someone's credit reporting
Mhm.
a $200 fee that you do or don't owe, and they're thinking no lawyer is going to represent me over a couple $100.
Right.
That is just simply not true. Me and my colleagues in this business, all the statutes that we use to fight against the debt collectors, the credit reporting agencies, thankfully they have an attorney's fee provision that says if the consumer wins, the bad guys pay. And that's how we're able to take these cases. There's often some upfront costs and fees associated with these programs, of course. But once it gets into litigation, it stops, and everything from there is contingency fee based. And so what I get to do is basically keep my clock running and saying, when I fight, I kind of give my bill to the bad guy instead of the consumer. So that's the first answer is we're able to take even small cases because the statutes allow us to say it's kind of David versus Goliath. We're the little guys fighting against these billion-dollar corporations, but we do it together. So that's one answer. And the second answer is because everyone deserves a free and clear and accurate credit report. Everyone does. So much of your life, so much of all of our lives are dependent upon credit reports that we don't even know. I know about. You may know about them, but your audience may not know about. I mean, you have credit reports related to your checking accounts, every rental history you've ever been in, fishing license, gun licensing, every insurance claim you've ever made. So that one small issue that might seem technical, that could be a much bigger issue. But nonetheless, that person deserves to go through their financial life knowing they're getting the benefit of the bargain based on what they and how they should be judged. And it's not fair for someone to be judged with false information. It's that simple. So we fight for the little case all the way up to the big case.
Amen. Amen. I love that. I love that quote too. If the consumer wins, the bad guys pay. Right. I love that. It's interesting. You talk about all the different reports. I remember once I got my LexisNexis report and I was blown away with the amount of information that they had on me from when I was 18 years old. It's like, I didn't even realize I had that phone number or that email, or it was like, holy smokes.
Right. That insurance policy, it's everything. That's right.
Yeah, it was unbelievable. But next question is, how can an individual determine if their credit repair warrants legal action? And I think you kind of touched base a little bit on that with your previous answer, but maybe just add to that.
I love that question. And in fact, it kind of informs this whole thing we're trying to do in this industry together. So Dominic, you've heard this several times, and your wonderful wife, Amy. We're trying to build partnerships with folks like you guys who think the same way, who want to help people, who want to do the right thing. And without the ability to build this partnership, so many fewer people get help. So what I always joke is no one knows I exist, right? No one's Googling, I want to sue Experian under 15, blah, 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 all the stuff that we care about.
Yeah.
What they do is they find you. And what we're trying to now do is build this partnership where you do credit repair, but it's backed by litigation. And we kind of created this whole new system called litigation-backed credit repair. And not only is it a way we can help more people, but sometimes it's the only or the last resort. And you know this, you're in the business, right? So how many times are there disputes on the most objective issue that should be fixed? And it just doesn't. It gets verified as accurate. Or even worse,
time and time again.
Middle finger you, for lack of a better term, and say, we think this is suspicious. We're not even going to investigate your dispute. So what do, right? You build this partnership with me, and I built this network of attorneys across the country that say, we're going to fight that. We're not going to let this company push us around anymore. So when credit repair ends is where litigation begins. That's the simplest way to look at it. Credit repair is a wonderful thing. It works in a lot of ways. It is a great tool, especially if you use systems that can be litigation backed. But there are going to be times when it doesn't work just by the nature of the system itself. And if you don't have a lawyer or law firm or a lawyer who works with other lawyers in your state, then what do you do? Yeah. So the determination is as simple as if the credit repair should work and it doesn't, well, then we litigate.
Hey, I think that's as simple as it gets it right there. If it doesn't work, then we go to litigation. And as we should as consumers, because we have to hold them accountable just like they hold us accountable. That's what I tell everybody when I go into these classes and teach. As consumers, there are laws that protect us. There are laws that we have at our disposal, but most of us don't know. As a matter of fact, I would say that 99% of the consumers I talk to have no idea. They don't know what the laws are called, that there is even a law. They just think that we have to abide by everything that's there. And it's like, no, just like they hold us accountable, we have to hold them accountable, which is why you're there, to be able to make sure that it's fair. And that's what you've said, even I think in the last live, you talked about that fairness component,
Right.
that, things have to be fair for us as consumers. And so I absolutely love that, man.
And if I can say real quick,
Yeah,
let's think about that again for those who didn't get to hear that last time. There is a federal law that governs this entire realm, and it is called the FCRA, the Fair Credit Reporting Act. Congress, if it wanted to, could have just called the law the Credit Reporting Act. It would have been simple, right?
true.
It's the Credit Reporting Act. It's the act that we all have to follow. But no, they decided the very first word is fairness. And that's how we always tell these stories with what is fair here. Is it fair for a company to report a debt that you don't owe? Of course not. Is it fair to report you late for something when you weren't late? Of course not. Is it fair to report someone else's debt against you? All of these questions are pretty simple when you think about it. What's fair and what's not? And we come in when that fairness principle doesn't govern the decision-making process. Because unfortunately, it's usually profit that's driving their business decisions, not fairness. And we try to fill the gap. That's what we're here for.
Beautiful. I kind of got to go off script a little bit because you said something and it just jogged a thought. But if you can't, that's fine. But if you could talk to like the process kind of, because one of the things that I understand about the FCRA is that they initially do an investigation. I like to tell everybody, look, creditors have a responsibility. They have laws that they have to adhere to before anything even shows up on our credit report. And so if they've done all those things, then they have a right to put it on there. But if somewhere along the way they didn't, then they've already violated the law, right? And that's kind of where I think we find ourselves. But do you find that is the case where there are a set of laws that they have to follow or adhere to before it even shows up on our credit report?
Absolutely. So it's a good segue from the last, question about fairness, because that law, the Fair Credit Reporting Act, is the principle. It's kind of this framework. And that law, the framework starts not just after a credit report is generated or after something's been disputed. The law is starting this whole framework about even the information that can even go on a credit report in the first place. What information can be used to formulate a credit report? How long can information be on there if it's good or bad? So the law covers a whole host of things, including, like you mentioned, principles that are supposed to be followed on the very front end. These are things that they're supposed to perform an investigation. I'm getting a little bit ahead of ourselves, but if you dispute, let's say there's something wrong in a credit report, and if you dispute, the law says that the credit reporting agency must engage in a re-investigation of the information. Well, if you think of that, if what they're doing after his dispute is called under the law a re-investigation, well, that presupposes there had to have been an investigation, right?
Mm-hmm.
And so that principle is the exact question you're asking: is this information is supposed to be vetted, it's supposed to be investigated, it's supposed to be and is certified as accurate. That's the miraculous thing about all of this. Is one of the principles that is followed is for a company to report information about you, like Capital One or your landlord, any of the company who's giving the information, right? They're called a furnisher. They furnish the information. They have an agreement that they say before they furnish anything, they are certifying it as accurate. Well, that's a high bar. They're not just saying we
Yeah.
think it's accurate or it's 80% accurate. They're saying we are certifying its accuracy. Now we know that's a joke because
Right. Right.
40% or more of credit reports have grave errors on them. So I don't think there's something wrong between 100% is certified as true and we're finding so many errors. But you're exactly right. When I get involved, it's because things went way wrong. We're talking litigation way down the line because procedures haven't been followed from the beginning.
Yeah. No. Yeah. Oops. Sorry about that. That's kind of what I have always understood, just that reinvestigation, which, like you said, means that they had to have investigated it to begin with. So,
Right.
But one of the questions that came up was with a client that we spoke with, and they were like, "Well, how long is this going to take? Like, how if we do the litigation, like, how long are we looking at, dealing with this?
Right.
Can you kind of speak to that? Because I got to imagine that could also vary."
Absolutely. And it, of course, does vary. So, like
Mhm.
anything in life, there's no guarantee. And as lawyers, that's one of the things we're not ever allowed to do is give a guarantee. So, the answer varies. But I can tell you there's some standard principles that we kind of go by in terms of timelines.
Mhm.
And the timeline is going to depend upon the type of case and the value and how big that case is. So, just for example, if we're talking about a very technical issue, hey, they reported it as 30 days late, they're wrong. I can prove a check was cashed on day 28. That case isn't going to take very long, soup to nuts, because it's pretty black and white. We're not going to be demanding a lot of money. It's just fix this issue. It's pretty quick. But if we're talking about decades worth of identity theft and there's 60 accounts that have been opened up, I mean, that case is going to take years. So it's all, a threshold that depends on the type of case. But I will say we separate every case into a classification of a bronze, a silver, or a gold. And that helps us determine timelines and it helps us determine valuation. The bronze cases are going to be the most common. Those are the cases that are going to get things removed from credit reports quickly. Those usually take between 6 and 12 months on average. Those are the smaller cases. That may sound like a long time, but that's generally how long credit repair takes anyway, if it can be successful. So we've tried to build this litigation system, at least on the smaller cases, to dovetail with that same kind of timeline, that between 6 and 12 months is on average when we're going to get the results. And then it just increases with the value of these cases. And if, we're talking about not so simple of issues, of course, it gets more complicated. But with additional time, usually comes a lot more money because it's worth a lot more. There's a lot more damages at issue.
Wonderful. This same client also asked, could they represent themselves, or is it something like they should have? Would we recommend that they would have, of course, legal representation if they were going to go through it?
It's a great question. I'm not the type of lawyer who's always trying to sell my services no matter what. I know there's enough of demand for what I do that I'm never going to be hurting for work. So I'm not going to go out and say that you can't do this yourself. That's just simply not true. I will say that we generally think of when clients come in, we want to sort them into one of three buckets, right? The first one is if they qualify and they're a good litigation candidate, they shouldn't be doing it themselves because that means they have a good, solid foundation for a case. And with the help of us as lawyers, we're going to litigate it. We're going to get some real results. That's always going to be the best solution. Then the second path is, well, maybe they're not litigation candidates, but they want to do credit repair, and that's great. We partner with, again, folks like you, and you're good at what you do. But there's always going to be some set of consumers who don't trust lawyers, don't think they have the time, think they can do it themselves. And you know what? Great. We want to help with that anyway. So we have some tools that we can talk about, at some point when the time comes. Just the same kind of tools we use when we partner with you is educational. We have some educational tools for consumers that can at least watch some videos from lawyers and at least get some template letters from lawyers to get a head start. Other than that, I would say you've got to go down one of those three paths. Litigation, if
Yeah.
it's possible, is going to be the best thing for everyone. It's finality. It gets, there's a settlement agreement at the end it acts like a contract. There's permanency there. But again,
Yep.
we know that there's going to be some set of people who want to do it themselves, and great, we want to help you do that.
Yeah. Perfect. No, that's absolutely perfect. And when that time comes, we'll make sure that we get that out there for you guys so that you have access to the course. If you want to do that, we'll make sure to post that for you guys, so you can take advantage of that if you choose to go that route, for sure. So, you mentioned in that last statement some finality, and I know one of the questions they talked about, if something was removed from their credit report, like what lets them know, like, or what can they do to ensure like that doesn't reappear later on?
That is one of the top questions we get in this system is something was deleted and it came back. Now what?
Yeah.
And that pattern is so frequent. It's one of the reasons why we built this whole litigation-backed credit repair system, is because just credit repair, if it's successful, usually ends up with a deletion, right? That's the standard successful outcome. Sometimes you might get some debt forgiven, or you might get a letter saying something's settled, but usually it's just a deletion. And lo and behold, they come back a lot. Now, the law says they're not supposed to do that unless they follow steps first, which they often don't do. So if something is deleted, and then they're going to what's called in the law reinsert. It's called a reinsertion case. So before you reinsert information, I'm just going to make up words here. I'm not suggesting these are defendants or who. I'm just going to use standard players. But let's say there's a Capital One account. It fell behind. There were some issues. They sent it over to a debt collector, whatever. The debt collector maybe accepts a settlement and says, hey, for payment, we're going to delete this from your credit report. That all sounds great, right? Send in the payment, it gets deleted. What happens 4 months later? That comes back, right? What is supposed to happen is before it comes back, they're supposed to send you a letter. The credit bureau is supposed to send you a letter saying, this account was previously deleted in the past. We are now being told by company X, they are now recertifying it as accurate. Remember, there's already a certification process. They are now recertifying it as accurate. And they're supposed to then give you 30 days after you get that letter to basically go work it out with the company. Like, hey, I got this reinsertion notice. It says this account's going to come back. Well, no matter what the consumer does in those 30 days, it almost always comes back anyway.
Right.
But that's, again, there's two problems there. One is if they don't send that letter, that is a very good case. We can almost guarantee, not allowed to guarantee anything, you can almost guarantee that that case is going to result in that account now coming off in a permanent way. And the reason I say permanent, again, you talked about finality, is because when we resolve a case, I get a settlement agreement signed. That is a contract. That is a new contract formed between the consumer, my client, and these bad guys, the credit reporting agencies and the furnisher. And then that settlement agreement that says they're going to remove it permanently and they're going to forgive the debt, just assuming it says both those things. Now, if it comes back, boy, am I happy. And that's just dollar signs, because that next case is worth a lot of money, because we're going to say there's punitive damages. You don't get that in just a credit repair system. If you get a letter and it gets deleted and then it comes back, what are you going to do? But working with us, now you can fight.
That's awesome. Now, I hope you guys caught that. But when you said it could potentially be a lot of money, like, did you mean for you, or did you mean for the consumer, or did you mean for both?
I'm so glad you said everyone, frankly.
Everyone.
Yeah. again, we take these cases on a contingency fee basis, but
Mm-hmm.
we do so because we can get paid pretty handsomely. One of the principles in the law is it's called a lodestar. And I'm not going to bore you with the details, but basically it means I get to keep an hourly rate and I get to keep my time. At the end of the case, I basically hand them my bill. That's my lodestar rate. It's my hourly rate times how long I've worked in the case. That's how I get paid in these cases. Either that
Mm-hmm.
or I get a percentage if it's big enough. So
Mm-hmm.
yes, I get paid by the bad guys when we win. So either I'm going to say, in addition to you have to do X, Y, and Z, hold it for a second because we're going to talk about X, Y, and Z. That's for the client. But in addition to X, Y, and Z, here's my bill. And that's how this whole system's able to work. So yes, I get paid and I love it. And if people want to fight me, I love that more because my clock just doesn't stop, right?
Right. Right.
And one of the coolest parts about these laws, and I should have mentioned this before, is even if we lose, you don't pay my fees and you don't pay the other side's fees. That is huge, right? So
That's
if they
massive.
lose, they pay us. That's how I get paid, right? But if we lose, it's not a two-way street. So that's a huge, huge bedrock principle so that consumers aren't afraid that if they have to risk paying me tens of thousands of dollars if they want to fight me, or hundreds if it's a long enough case. Because again,
Right.
if I'm working on the case, I keep my time.
Wow.
But if a consumer had to worry about paying that to me or the other side, you'd never ever get involved in these cases. So yes, I get paid. Secondly,
Yeah.
the consumer absolutely gets paid in these cases, especially if they're silver or gold cases. There's three parts to it. One, fix the problem. We're going to get the credit reporting fixed. We're going to get it accurate and complete. That might mean deletions, hopefully a lot of deletions. That's always number one. Fix the problem. Number two, get the consumer compensated. The laws provide a couple of small damages, $1,000 a piece. That can add up, a couple grand here or there. That's not super sexy, but that's just the minimum the consumers get in these cases. You
Right.
can get actual damages, punitive damages. I mean, I've had cases where my clients truly have life-changing money, like hundreds and hundreds of thousands of dollars in their pocket at the end of the case because that's how severe the issue was and that's how much they've been damaged. But yes, these cases result in three things. Fix the problem, compensation for the consumers, compensation for the lawyers paid by the bad guys. 1, 2, 3.
1, 2, 3. That's awesome. I mean, it truly is a win-win-win because for the consumer, they're outside of time. There's no risk. It's just a matter of sometimes it could take time, but they don't have to pay you. They don't have to pay the bad guys. And what would they have to lose to go that route? I don't think you really lose anything.
Time.
The whole, yeah, just time. Yeah. And so to me, that's an absolute beautiful thing. And I think it's worth the time when, we've spent so much time where we are as consumers, right? Having gone through it myself, I paid a price for a very long time where
Yes.
maybe I could have gotten out of that sooner. Maybe I didn't have to spend the time paying the thousands and thousands of extra dollars I had to pay because of certain things. And it's like, even if at the end of it, that's one of the things I love about what we do. We give our clients a credit action plan every 30 to 45 days. So they are getting educated. They know exactly what they need to do, what steps they need to take along the way. It's like, even if having gone through that, I just got that information at the end of the day, I bettered myself. At the end of the day, it didn't cost me anything because I'm in a much better place today than I was before I started it. And so that's what I'm trying to get consumers to also understand is, man, you can't underestimate the value of what you're getting doing these processes. It is well worth any type of cost or time that you have invested in it. And so there you go. I said my 2 cents.
I love that. And I feel the same way. Sometimes I just run a simple math equation for clients. Like if you pay an extra 2% in a mortgage rate let's amortize that over the life of your loan.
Whew.
You could be paying extra tens of thousands of dollars. And guess what?
Yeah.
At 2%, you might not even recognize that you paid 2% higher because of what was on your credit report. You might just thought, oh, that's the rate I got.
Right.
But we're talking
Right.
about things that might seem smaller details that add up, that change lives. And you're right, the time investment, not only is it somewhat risk-free because of the fees, but at the end of the day, you're likely to get one of two things: a rubber stamp saying nothing's wrong, no one's breaking the law, everything looks great, go on with your lives. Or there are things wrong, but now we have not only your action plan, but when those fail, when credit repair just isn't working anymore, then litigation comes in, and we're able to solve the problems in a different way, in a stronger way, but a different way.
Yeah. You mentioned that you've had clients who've had life-changing hundreds of thousands. Like, when I hear that, or when maybe someone else hears that, they think, why would these companies or the credit reporting agencies, why would they just continue or pay out all of this money, and why not fix the problem? Like, could you speak to what you've seen in that? Like, why not just fix it?
So I'm going to answer that with a pessimistic hat on and a less pessimistic hat on. I'll answer it in two ways. The first way, which is less pessimistic, is it's complicated. There are literally billions of bits of information shared every day between these companies. Billions of pieces of information. And when you're talking at that scale, mistakes are going to happen. So inevitably, when we're talking about 300 plus million Americans, and then how many adults, and then how many on average accounts each of those adults have, and then you're talking about on each account having 20 to 30 bits of information, just do the math. We're literally talking millions of things. And so what these companies always say is, yeah, we're so big. We get it right 99.4% of the time. And that might sound great, but when you realize, well, what's 0.6% of the population? We're still talking about tens of thousands of mistakes that you're admitting to. So that's the less pessimistic answer, which is the system is just so big. Our complex borrowing system, our debt collection systems, everything is so big that mistakes are going to happen. They're going to report things wrong, and things are going to slip through the cracks. That's the one answer. The pessimistic answer, and the one I favor, is that it's just cheaper to fix these problems. They are smart. These companies are smart. They are billion-dollar capitalized companies. When you're that big, you employ some very, very smart people, like actuaries. And sometimes those actuaries run some numbers, and they say, okay, there's this problem. This problem is causing X issues. Part of X issues is these lawsuits. These lawsuits are this much money every year. Guess what? If we put that up against fixing the problem, sometimes it's just simply, it's a profit decision. They know that not enough consumers know that I exist. They know that not enough consumers connect with brilliant, folks like you guys who look at the world the right way, who are willing to fight. And there are just a lot of consumers who are beat down. They don't. The single mother working 3 jobs who is barely putting food on the table, if there's something wrong on a credit report and she has to think I'm going to have to pay someone, the last thing on her mind is there's someone who can help me. So our job is to break through the noise, to educate, to maybe make big enough issue something that they fix it. That would be ideal for the system. But yeah, it's just cheaper.
Just cheaper. That's.
And Dom, let's think about the numbers. So we're talking about to pay out these settlements, but they're also paying their high-priced lawyers.
That's
the
true.
Whole time too, right? So one of the leverage points we have is, do you really want to fight me for a year on a case that's pretty black and white, because you're going to end up paying me in the long run. You're going to pay the consumer. And that glass mansion firm that you hired in downtown Miami, Tampa, New York, they charge a lot more than I do.
Yeah, no question.
So,
Wow.
um, yeah, at the end of the day, it's just a math equation. It's as
Just a
simple as
math equation. Sheesh. That's really it is mind blowing that that would be the case. But I get it. I understand that that's sometimes what we see in the world we live in. But and that's why I'm glad you're here. I'm glad we connected, man, because to be able to bring this to our clients and our friends and family, and it's just such a game changer. Because, like I said, we've heard a lot about it, talked a lot about different things, but to be in partnership with you guys, and like I said, I love your heart, love everything you guys are doing over there, and so we're excited to be on this side of things and truly bring this for our clients. So
yeah,
I
and
kind of, oh, go ahead.
I just wanted to let's tie a bow on that because it doesn't work without you too, right?
Yeah,
Um, like I said, consumers don't find me, and frankly, I don't really want them finding me that much directly. I'd rather them go to a partner who knows the right questions, can maybe help them on the front end. It kind of
yeah,
acts as a filter for me.
yeah,
But what we're just trying to do, both of us, is just help more people, right? That's the
yeah,
end of it.
yeah,
And as long as we're aligned on that, we'll always find ways to help people, find ways to do it together.
yeah. Nope, that's beautiful. I kind of want to like just shift gears a little bit, because I know one of the questions that came through, we had a client like because we talked briefly, most of our clients come to us because they want to make a major life change. Sometimes it might be to buy a car, but typically it's to buy a home or
Yes.
maybe refinance their home. That's the number one reason by far most consumers are finding us, because they're at a stage in life or they want to buy a home, they can't, they want to get approved, was denied. Um, they need to get their score, here, or, just to be able to qualify. And in the rate environment that we've been in the last few years here, it's not even just qualify. Now it's like, well, I need to get it high enough to get my rate down lower so that I can
Yes.
qualify, right? Because you might
Right.
qualify in terms of being able to be approvable, but the rate might be too high to where you
And then you
can
can't afford
afford
the monthly.
financially.
Exactly.
Yeah. Um, one of the things the client was about 140 points credit score wise away from where this particular case she needed to be. But like in the litigation side of things, have you seen that be able to help still in the credit score arena, or would that be something you would recommend someone to like them to work with us through the credit repair process, but always keeping litigation open?
Yeah, excellent question. And I'd say both. So, on a case by case basis, we're going to make kind of a determination for each consumer. Are you a litigation candidate now? Or are you a litigation candidate in the future? And to make that decision, there's just some pre screening that goes on. One of the biggest questions you hit on right on the head is, do you want or need a mortgage in the next 12 months? That's the biggest, obviously, credit decision. It's the biggest financial decision almost everyone will make in their entire lives. Um, I don't think a lot of our clients are buying planes, but um, so we recognize that's the driver a lot of times. Unfortunately, because of the Great Recession and some financial chicanery that was going on, I'll say, at that time, you had a lot of people who were artificially disputing accounts, which would then raise credit scores because some credit scoring models, if an account is disputed, it's not counted against you. Well, in 2007 and before, people realized we can kind of rig this system. We could get people to qualify for mortgages that they shouldn't by artificially disputing everything. And so a whole block of people qualified for mortgages that they shouldn't have been able to. So in response to that, the Dodd-Frank Act was passed. And now it says if you're going to buy a mortgage that's going to be federally backed by Fannie or Freddie, and almost every mortgage product is, you cannot have any disputes on your credit report at all. So they kind of threw the baby out with the bathwater and went the whole other way.
Yeah.
So The question starting with is, do you need a mortgage in the next 12 months? If that's the case, you may not qualify. Now, the second question needs to be asked, well, could you conceivably get it in the next 12 months? And if you're 140 points away, probably not.
Yeah.
Someone comes to me 20, 30, 40, 50, even 60 points away from their goal, we may not be able to, litigation may not be the answer, because credit repair, we might accomplish that, within a year. If someone's 100 plus points or more, it's going to, listen, you have time. It's going to take some time to do this. And guess what? Litigation's your best answer anyway. So in a way, we may have people who just are afraid of litigation. They don't feel litigious. They're scared of it. And at first, we might try credit repair because, like you said, there's going to be some instances where that might be the best thing first. If someone's 30 points away from a better rate, go get your loan, then come back to us. We want to help you in the future. It's just the timing may be different. So your question was spot on. That's the biggest one. A mortgage needed in the next 12 months and can qualify. Again, if someone comes to me with a 485 credit score, I might just have to tell them, you got at least a year. So don't worry about your timeline. But yeah, there are times when, again, litigation is just not the answer for different reasons. And that could be one of them, a house or other reasons. But then you've got beautiful partners that can help you with credit repair. Or again, our very last kind of downsell option, which is some do-it-yourself tools if people want them. We want to help no matter what, the angle.
Yeah. No, that's good. And I tell everyone, I said, when we start always, when looking at FICO and looking at scores, before we do anything, we start with these 5 factors because that's what FICO says. You have 5 factors to their scoring system. And the number 1 factor is payment history. Okay. They're looking at 35% of that history or that score is based on the payment history. How have you made your payments? Like what's showing on your credit report in terms of payment history? So anything we can do there to help, that's affecting 35% of that score. 30% is going to be based on utilization. Like we know that your credit cards and what utilization you have, the higher it is, the worse. We typically on a mortgage always tell everybody between 1% and 6%. That's kind of where you want to see it. You don't want to not use it because then they think, well, you're still not managing it, because everything for these companies is based on how we as consumers can manage it. Right? They want to see that we're actually utilizing it, managing it, and taking care of business. Okay.
Let me go one step further.
Go ahead.
That's not what they want. They want to create a system that we're not managing it, because they know 30% of people don't manage it well. They don't make money on the 70% of people that manage well. They sell us those products. They make their money on the 30% that get the default 26% interest rate, the late fees and stuff. So it's even worse. And again, that's my pessimistic side. They build their systems and processes to fail, specifically because they make more money on the failures. So they don't want to see us manage it. They want to see us not manage it. They want to see it just so you can barely make your minimum payment. So then on that grid, you see it does take you 27 years to pay off instead of 3. So yeah, I don't mean to interrupt rudely, but
no,
if you're nefarious, then you make it, my friend. The system is designed for defaults, for delinquencies, for late fees, for penalty interest rates, for a lot of money.
Yeah. No, that's great. That's a great, you guys, you heard it here. Like, and it's interesting because I always say, they make more money with the institutions, who are buying the bad credit, because they can make more money because they can charge us more. So that's a good point you bring in. It's like these institutions like people in certain credit score demographic, even in the auto industry, being a finance director, like there are certain institutions and lenders, their metrics, they know, hey, based on this score to this score, man, we love that score. They're going to pay more money to be able to market to those customers, right? And so they're going to them and saying, hey, give us between 560 and here, and boom, we know based on our history, on our data, that we can make this much money and we can afford to take these many losses.
Right.
And so they absolutely know that information. So that's a very good point that you bring up. It's kind of, yeah. And that's why I love that we can fight back,
Exactly.
And so, but like I tell them, I always like those 5 factors first to help boost any score. That 30% utilization, you got 15% in the age. They want to see some age. Okay. The longer you've been in, the better. Okay. And then you have the 2 10%ers, which is your inquiries and your mix. They want to see you have a mix of credit, both installment loans and credit lines. Okay. And so those are the 5 factors. When you're looking at your credit report, make sure you're basing it on that. It's like, okay, what's my payment history? What's my utilization? What does it say my age is? Because then we can attack it from there. Okay. So that's how I like to help them with, how to get there quicker. And that's part of what we do in our credit action plan, is to make sure that we're telling them exactly what they need to do month by month based on what they could do or get done the prior month. So no, but I love that. I love that, number one, we're candid and we're being honest and we're giving people the information that they actually need to hear, because they're not hearing this elsewhere. One of the things that I've had come up recently with the customer, and what would you advice or education you could give someone towards when they maybe get a letter or get served? Maybe they have they're going to be taken to court, or their wages just got garnished or something. Like, what steps should they take at that point? In that process?
Well, the very first and easy response to that is, don't put your head in the sand as a consumer, no matter what stage you're at. And you described 2 very important but very different stages of the case. Being served on the front end, whether you're served with papers from a process server, some courts require that. Some courts, like small claims, you might just get a certified letter in the mail. Those happen at the beginning of a case, generally speaking. If someone's being garnished, they're way later in the process. One of 2 things happen. Either it's a federal student loan and you can go straight to garnishment, you don't have to go through court, or unfortunately that consumer, unbeknownst or not, they've already got a judgment against them, because to have a garnishment, you've had to get through the court process. So let's hope we're dealing with a lot more of the former and very few of the latter, because if you're already at the garnishment stage, it's very difficult to unwind. A judgment has very likely been entered. Judgments follow you around for a very long time. They're hard to unwind, even for neglect. Even if you didn't know you were served, there's just really tough rules. So if you're at the garnishment stage, we're having a whole different conversation. Then you might be looking at bankruptcy. You might have to be considering a settlement that takes it outside of the garnishment. And listen, these companies love garnishments because they're getting money directly from an employer. They'd rather get that than have to go through you. So if we're dealing with the garnishment, I don't want to go too far down that path, because that's a bad path that we're already on.
Sure.
Just to say, don't let it get that far. So let's talk about if it's the former, which is the better option. So a consumer has just been served recently. And again, and sometimes it might happen, a consumer doesn't know it yet. They didn't get the letter in the mail, they didn't get the process server, but they get a lot of advertisement letters from lawyers. That happens pretty frequently, because lawyers pay for services that you can know who's being sued. But anyway, the first answer is just don't put your head in the sand. Always respond in some way. You just want to avoid a judgment at all costs. Judgments are fatal. Judgments have very few options other than bankruptcy, and we all want to avoid bankruptcy if we can. That's what credit repair is meant for, is to help inflate scores to get what you can, and then also help repairs to stay away from some other bad options. But if you're served, I will tell you a couple things. Most importantly is, one, if you have no other option, just try to reach an agreement with the other side. They just want a settlement. They don't want to have to go to the court. They don't want to have to get a garnishment. That takes time. That takes money for all of them. If you don't have great defenses to the lawsuit, if it's not a clear winner, and we can talk about what some of those may be. Just if nothing else, show up at the pretrial conference. It's basically a mediation. They tell you go into a room and make a deal, or even before that, call the lawyer involved. Call up the law office and say, I got served with this. I want to work out some arrangement. You have that option, and that's another super important response to that question. Is a lot of people think once they're served or once a lawsuit, they can't settle anymore. They have nothing but to just go try to win in court. That's not true. You can absolutely negotiate during that whole process, and I recommend it. So then the other things I would say is just think about some low-hanging fruit issues. How long ago was the debt? Most states, if it was over 5 years, sometimes even shorter, then you might be able to win that lawsuit. That's an easy thing that a consumer can try to figure out him or herself. Other things would be if it's as simple as, hey, I paid this. I'm being sued on something I settled in the past. Start thinking of what are potential defenses to these lawsuits. And that would be one of them. But then again, if all else fails, just get into a payment plan. Avoid a default judgment. That's the worst case. Avoid a judgment. Yeah. They'll follow you around forever in most states, 20 plus years. It's not like credit reporting or something falls off, it goes away after a certain time. That'll follow you around. So yeah. I know it's a long answer. It's a complicated question, but it's a super important one.
No, that's good, because I know in the state of Michigan, we have a statute, our statute of limitation is 6 years, and so when I talk about statute of limitations, and Aaron, correct me if I'm wrong, but like we're talking, that's the legal amount of time they have to collect the debt based on when it goes bad. And
no, hold on.
Yeah, go ahead.
That is a critical distinction. The statute of limitations is the time that they can successfully sue you for that debt.
Sue, yes.
It does not mean that debt goes away or that debt doesn't exist anymore. In some practical ways, it kind of does if they can't sue you, but a debt that's 25 years old can exist in some states if they just can't sue you on it. So I want to make that distinction. It's really important. It doesn't. Yeah. Some people think, oh, the statute of limitations is gone, the debt's gone. That's just not how it works.
Not true. Yeah. Now, and I did. Now, in my research and study, what I understood and understand is that if they do get a judgment, even if they don't garnish your wages, that judgment is now 10 years, but they can renew that judgment at the end of every single time, like you talk about, indefinitely. Every 10 years, they can renew it, and it's good for another 10 years to be able to sue at that point. Is that correct?
Well, a judgment, they've already sued, remember. So that just means they have the vehicle of the court to collect. They can try to garnish, they can intercept tax returns. They don't have to sue you again. It just means the debt never goes away. That's a lot more powerful than they can no longer sue you. Let me also tell you a little trick of the trade, though, Dominic. You said that in Michigan it's 6 years, which is true. But here's a little trick. Sometimes you can use the state of where the card was issued from. So I'll give you an example. A lot of credit cards, especially department store cards, are issued from the state of Delaware. Delaware has a 3-year statute of limitations. So even if a consumer is being sued in Michigan at year 5, the other side might be saying, we are within our 6 years, we win. But you could dig a little deeper. You find out that it's a department store card that has a Delaware choice of law. Now they're dead in the water. So that's something you can think about. So that's a little tidbit of, yes, it's 6 years in most cases, but what if the contract underlying says it's Delaware? That would be great. And a lot of them do that.
Interesting. That's good to know. See, like I said, I always learn something new when I'm talking to this man. And so I love that. I absolutely love that. That's good. And that's why I love, like what you said, don't bury your head in the sand. As a consumer, that really is the worst thing we can do. And I know it's probably unfortunately, the most natural thing for us to do is just ignore it. It's like, if we ignore it in our mind, it goes away. I don't have to be stressed. I don't have to worry about it. I don't have to be anxious. Look, I get all of that. But it really is the worst thing we can do, is to just bury our heads.
what the statistics show is between 88 and 92% of people just let it go to a default judgment. Think of that. Out of every 100 of these lawsuits that these companies file, they just automatically win 88 to 92 of them because the consumer doesn't show. So
Wow.
we're trying to change that. We're trying to flip that on its head, because the worst thing you can do, like you said, is just put your head in the sand. Don't do that.
Yeah. Yeah. Well, man, listen, we got 5 minutes. I really appreciate your time this evening once again. And I'd like to do something, if we can. I really kind of want to delve into maybe the next one we do, just the FDCPA, to
Yes.
where we can just strictly talk about collections and the Fair Debt Collection Practices Act, and just kind of maybe go into a deep dive, because
Yes.
that's probably the number one issue we talk to most consumers about is, I have a collection, I have collections, what do I do? How do I
Yes.
address this? So maybe the next one we can kind of plan on that.
Yeah, we did talk a lot about, and we focus on credit reporting quite a bit, because
Mhm.
that is fundamentally what drives a lot of the credit repair, is
Mhm.
what does the law say should happen. But I also realized, and we built this program to deal with debt collectors first, because they're the worst, So just like there is the Fair Credit Reporting Act, the FCRA, you just mentioned, the FDCPA is the Fair Debt Collection Practices Act. So just like Congress could have called it the Debt Collection Practices Act, they didn't. They added the word fair. So there's a whole hour plus we can talk, much more than that, on what that means, what it means to be in the fairness business in terms of debt collection, which isn't
Beautiful.
often the standard.
Beautiful.
So yeah, love to
Beautiful.
talk about that.
Beautiful. Well, you guys heard it. So what we'll do is we'll get that scheduled for next time. And I really appreciate you guys hanging out with us this evening. Aaron, again, I appreciate your time for being willing to hop on and give education to our clients and friends and family. So we appreciate your time very much. And if you can hang out just for a minute, we'll try to get that something scheduled. But guys, I'm going to let you guys go for the evening. Once again, thank you so much for joining us, and let us know if you have any questions, need any help. We're always here to help you.
Yes,
Love you
thank
guys.
you all. Appreciate it. Thank you.
Thank you. Thank you.